I think the most likely case is that we see steady online growth over the course of this holiday season because of the same factors that have been driving it over the last couple of quarters, like the need to social distance, the convenience of it, the repetitive behavior of buying online. Now, it will become important to have this omni-channel presence as we move throughout the holiday season because there are some bottlenecks in the logistics chains in this country. And so by the time we get to middle of December, being able to fulfill from stores and have buy online, pick up in store will be a real advantage for the traditional retailers. And that's going to further facilitate demand for online shopping.
Right. So, Michael, who's best positioned for those omni-channel sales? I think Amazon recently said that they're encouraging some of their users to go to their bookstores to pick up goods, but there's not that many Amazon bookstores. Is it Walmart, Target? Who's best positioned if we do see some of those log jams and the logistical processes closer to Christmas?
Absolutely. It's the winners who keep on winning, the big, large, traditional players like Walmart, like Target, like Home Depot, like Lowe's, who've really done a fabulous job at pivoting and serving customers in a variety of channels and being able to
Not
get
Amazon, Michael?
Amazon.
I noticed that you didn't include them.
Yeah, Amazon is covered by my partner, Eric Sheridan, and he is a big fan of Big Bull on Amazon. He thinks that not only is it going to be a winner in the near term, but over the long run. Where we think the important point over the holiday season will be is having this multi-channel approach, and that's going to push more of the volume, more of the share to these large players like Walmart, Target, and others.
Michael, good morning. What do we learn from Gap? Because that's a company that should be in a great position with omni-channel, having a bunch of physical locations, some of them not even in malls. It's a name that people know. Apparel isn't doing that badly, but, you know, they didn't really seem to do that great.
Apparel is a very occasion-based purchase. And the fact that consumer behavior has changed significantly over the last 6 months, going out to less events, going to work less, has really put a damper on overall apparel sales. At the same time, there's been market share shift to players like Target that have been really winning within the apparel sector. So I think what we're seeing across that space is some of the challenges within the sector, but also a share shift. And that's influenced the outcomes for different retailers.
Hey, finally, Michael, I'm thinking back to some of the concerns of the week so far. No guide from Best Buy and no margin blowout despite those incredible comps on appliances. And then this operating expense number out of Gap, as obviously shipping goods around the country is getting a little more expensive. I mean, how much do you think those play in the larger sense of the sector?
So there are a couple important points thus far from reporting season. Number one, trends have strengthened early thus far into holiday season for those retailers that have been doing particularly well. Two, some of the change in channel mix has had an impact on profitability. Now, players like Best Buy, Dick's Sporting Goods, Walmart, Target, Home Depot, and Lowe's, they've all done a really nice job at shifting and dealing with the channel mix and the profitability pressures that come along with it. We think that continues, and where some of the conversation around the quarter-to-date trends have been a little conservative, it's just keeping expectations low because there is a lot of the season left. So there's still time to go out and get your presents if you haven't done already.
Shepard Smith here. Thanks for watching CNBC on YouTube.